ET travel stocks and other, reopening, plays hammered as Treasury yields plunge. Angela Weiss, Agence France Presse. Getty Images. Email icon, Facebook icon, Twitter icon, LinkedIn icon, Flipboard icon, print icon, resize icon. U.S. stocks fell sharply Monday, joining a global equity sell-off, as concerns grew about the spread of the Delta variant of the coronavirus that causes COVID-19, and as tensions ratcheted up between the US and China. What are major indexes doing? The Dow Jones Industrial AverageDJIA, minus 2.50%, was down 915 points, or 2.6%, at 33,772. The S&P 500 SPX, minus 1.95%, dropped 87 points, or 2%, to 4,239. The Nasdaq Composite Comp, minus 1.27%, gave up 206 points, or 1.4%, at 14,219. The small-cap Russell 2000 RUT, minus 1.58%, shed 22 points, or 1.1%, to 2,140. A close below 2,124.15 would mark a pullback of 10% from its recent high, meeting the widely used definition of a market correction. Stocks ended lower Friday, with all three major indexes down for the week, ending a string of 3 consecutive weekly wins. The Dow saw a 0.5% weekly decline, while the S&P 500 slid 1% and the Nasdaq Composite shed 1.9%. What's driving the market? Pressure on global equity markets Monday was attributed largely to the continued rise in the number of COVID-19 cases worldwide, but also to concerns about peak everything, and to rising US and China tensions. The Delta variant is getting a lot of attention right now as an explanation for weakness, said Sahak Manuelian, head of equity trading at Wedbush Securities in Los Angeles, told MarketWatch. Another good reason is really peak everything. Peak valuations, peak growth, he said. Add in the Delta variant and you have a decent case for why stocks are lower. But the third thing, which might be the most troubling, is US-China relations. They are certainly getting worse. The Biden administration on Monday blamed China for a hack of Microsoft Exchange email server software that compromised tens of thousands of computers around the world earlier this year. The European Union and Britain also pointed the finger at China. Democratic senators also were expected to make public on Monday a plan to raise $14 billion annually by imposing taxes on China and other countries not significantly reducing emissions that warm the planet, the New York Times reported. Need to know: COVID-19 cases may cause an S&P 500 correction, analyst says. Buy these stocks in the next dip on the pandemic front. Concerns about the virus have been particularly problematic for sectors and industries, such as travel, that were expected to benefit the most from the reopening of the global economy. Airline stocks tumbled, with the industry tracking U.S. global jets ETFJETS, minus 4.24%, dropping more than 3.2%, while plane maker Boeing Co. BA, minus 5.49%, a Dow component, dropped 5.4%, on fears the spread of the variant could trigger renewed travel restrictions. Also Monday, Treasuries continue to rally, keeping pressure on yields, which move in the opposite direction of prices.